Hey, chameleons. Thanks for joining us for today's Thursday edition of the Pre-Market Show. How are you doing this morning, Dima?
Good, Will. How are you? Thanks, everybody, for joining us today.
Hey,
Welcome.
Thanks for joining us. Whoops, sorry about that. Hold on. My sound was on YouTube. Sorry about that. All right. You ready for the disclaimer?
Yep. Let's start with the disclaimer. So before we start, everybody, keep in mind, Will and I and Market Chameleon, we're not registered investment advisors or broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional advice, contact your registered investment advisor or call your broker. They should be able to help you answer any questions. There's the disclaimer, everyone. And with that,
awesome job. A few housekeeping notes before we get started. We got a lot of new users and a lot of chit chat. We try to get to as many questions as we can, everybody. You can always email us at support@MarketChameleon if you have a question. We try to get to those as well. Remember, give us a thumbs up. And if you're new, subscribe to the YouTube channel. It's a real big deal for you. You get all the videos when they come live. Is that correct, D? Is that how it works?
Yeah, so you'll get notified by YouTube. If you subscribe to a channel, you get notified by YouTube when we either go live or when we post a new video guide. They let you know, and this way you just keep it keeps you notified. So that's one of the benefits of.
Awesome. We did have one question before you get started on the pre-market. A brand new individual who I hadn't seen before on the chat was asking about the ticker up top. I see on your ticker you have like EW ups.
Yeah.
1.8%.
So these are just symbols that you're looking up throughout the day, and it just keeps track of your recent symbol views. This way, if you needed to go back really quickly and check again, you have like a quick reference up top. So up here, sometimes when people are asking me questions about tickers, I put them up, but these are just the things that you recently searched. Will stay up top there, and if you click on them, it'll take you to that symbol. So if you click on, like, for example, here I clicked on Twitter, it'll take you to that symbol, and then you could go in there, analyze it, look up the options or whatever. So just a really quick way, to reference the symbols that you've been recently searching.
Yeah, there's no way to customize it. If you want a custom list, you could go in and create a watch list is the best way to do that.
Yeah, exactly. If you just want a custom list, you could create numerous watch lists. Here, I'll just go to once you create a watch list, one thing to keep in mind is you could use it in almost, every place, any of the screeners, any of the news lookups on the website. So you create a custom watch list here. I have I have a bunch of them. You give them names, you could select them, and then this way you just keep track of, any watch lists you want that way. If you want to go to the news scanner, you want to see anything in the news in your watch list, you could scan almost anywhere on the website by your watch list. If you're looking credit put spreads, stock ideas, wherever you navigate around, it saves that watch list for you.
Awesome job, D. Thanks.
Yep.
What's going on in the pre-market?
Here, like on a pre-market, you could also, once you have a watch list, you could look up if anything in the pre-market hours is moving. So here are all my watch lists. I just click on it, and then it'll just show all the things in my watch list. So that's one of the benefits of the watch list. So what I wanted to cover today, as usual, we'll start out with the pre-market report. Let's take a look at if there's anything upcoming in the earnings. I know there's not that many earnings being released anymore, but we'll see what's coming up. We'll take a look at open interest, see if anything interesting pops up with long buildups and calls. We could take a look at the vertical spreads, and maybe I'll do a new report today, something I haven't done before, market on close order imbalances. We'll talk a little bit about that because I don't think I've covered that in the morning show yet. So we'll take a look at that report as well. And of course, anybody have questions, post them to Will. He'll let me know, and I'll try to get to as many questions as I can today. So Will, the other thing, did you mention to people if they're having trouble on YouTube, they could link to Zoom?
Yeah, I did. Well, I did it in the chat. If you are having problems, I know Sandy was mentioning the Zoom link. We are doing the video on Zoom and it's transferring to YouTube. For some reason, we get some YouTube users, because their settings, get a fuzzy outcome on YouTube. So I just put the link onto the chat to the Zoom meeting. By the way, that link is the same every day. So if you keep it on file, you can just click over. It's the same link every day. Just an FYI to everyone. I should have mentioned that probably when we started 30 episodes or so ago, but there it is. The link is on our chat.
All right, so now, so let's just get started with the pre-market report. These are, if you're the first time, if you're looking at it, these are stocks that are moving in a pre-market hours. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. You know, one thing I'm just noticing right now, on the gainers list, we got like 42 versus decliners list of 123. So it looks like much weaker opening so far, just a quick observation from here. I'm going to take a look at if there's anything moving in the higher market cap stocks. So let's do that first. So I'm filtering out now 50 billion market cap or higher. So I see a couple of them, JP Morgan, BAC. I think, what's the AXP? Is that American Express?
Yes, it
American
is.
Express. They're up a little bit slightly prior to the market open. You know, I see now Tesla's down 6.8%, Zoom down 3.7%. So a lot of these, some of the high flyer stocks are for this
little
morning.
FYI on the Tesla, a large institutional shareholder had to get out of almost half. They had a 7% stake in Tesla. They're down to about a 3.5%.
Oh, really? So so they were getting out. And I know Tesla also did a secondary offering, right, to raise some capital.
5 billion. Yep.
5 billion. So we had that news, but overall it looks like, you know, the market's a little bit weaker today, but we've been, you know, going almost straight up for a while now.
5 months.
Yeah. Let me unfilter, see if anything's interesting. Don't know what this KCAC, but all of a sudden, you know, they got the commons up, the warrants up, the right is up. I don't see any news on it. It's very low market cap stock, but that's up 50% in the pre-market hours. Let me come down, see if we could find anything maybe with new CGIX. Let's take a look at that. So that looks like a biotech stock up 11% in the pre-market hours with 149,000 shares trading hands. So let's just use this one as an example, just to take a look at what's going on in the pre-market hours trading in CGIX. So biotech stock that closed at $5.75, trading in the pre-market hours of $6.40. That's up 11%. We see in the pre-market hours traded between $6.06 to $7.39, very wide. Here's what the pre-market chart looks like here with the the long VWAP bar between $6.53 to $6.62 on 31,500 shares. There is some kind of news, looks like some kind of news behind this move. I'm not going to get into the news here, let you guys read it and interpret it, but let's just take a look from a historical perspective, what the stock tended to do when it opened, when it had a gap move higher at the open. So this is looking at the last 3 years' largest 12% moves gains at the opening gap. So here we have the dates here. Any notes on potential catalysts behind the move over here, press releases, market moves. So we see that on average of these of the 12 biggest, the average upside move was 32.9%. And that compares to today's 11.3%. Let me just take a look at the median move, 15.9%. So let's take a look here. So somewhere right now, it's somewhere closer to the median move. Today's 11.3%. Let's take a look what it tended to do after gapping up in the morning. So we see from the open to the high of the day, the average move was 7.7%. We do see that 42% of the time that opening price was the high of the day. So these are telling me that whatever it opened at, that was the high of the day. The rest of the day drifted lower. 42% of the time, 58% of the time, it went higher from the opening. From the open to the low, the average move was 13.8%. And from the opening to the close of the day, it drifted lower more often than higher. 92% of the time, it closed lower from the opening price for an average loss of 8.7%. So that's really quickly a price action analysis and distribution of returns around large opening gap moves using the 12 largest gap moves in the last 3 years. Another thing, the following day looks like, the next day, that stock 67% of the time was lower, 33% higher for an average loss of 2.5%. We could see here it's been weaker coming out of these types of events. If you don't have anything on the pre-market specifically, Will, let me try to move on.
You move ahead.
Okay, so let's take a look at what's coming up in the earnings front. So these are upcoming. We'll take a look at what's coming up, what's expected to release earnings in the next 2 weeks. And we'll take a look at it from the perspective of the options traders. What is the magnitude of the move that they're expecting the stock to move up or down after releasing earnings? What I did here was filter out stocks that have an average daily option volume of 10,000 contracts or more. So here on top of the list, I see AVGO. What's that, Broadcom? Is that, yeah, Broadcom. So Broadcom expecting to report today after the market close. As of yesterday's close, that straddle was pricing in a 6.9% move in either direction. That compares to a 4-quarter historical actual move of 4.2%. So the average of the 4 quarters was 4.2%. In the last 12 quarters, the average also 4.2%. So we could see it's about 2.6% higher than the historical average moves. The high move in the last 12 quarters in Broadcom, 8.2%. So that's that straddle. DocuSign, that's coming up. I don't think we have a long history on DocuSign. That's been what IPO'd. Well, how long? Like maybe.
Well, I think it's been out there a while, but it's been in the news for not so long. Yeah, I mean, it's really jumped into the news with as one of the Corona trades. Let me go to my screen real quick.
Okay. So here, DocuSign also expecting today after the market close, and I know that's been like, ripping higher on the tear.
Looks like we have 11 previous earnings in
okay.
the history.
All right. So right now, the expected as of yesterday's close, the straddle was pricing 19.4% move in either direction. On average, the last 4 quarters, the average move up or down was 10.8%. In the last 12 quarters, it's been 8.5% with a high move of 21.7%. Right now, straddle is pricing 19.4% move. And it was up very big, right? In the last couple I think it was up like over 20% in the last 2 weeks.
Yeah,
we could take a look at that. These are coming up next week, so we'll leave them for the next shows. But these are the 2 big ones that popped out here. And Will, what did you say you had a question about this historical analysis of the view?
Yeah, I just wanted to see like an AVGO, or I mean, you could go to any of them. I wanted to go all the way to the end and look at the historical analysis, see if we can.
All right. So these are, if you click on this, what this is doing is going back and looking at different option strategies around the earnings, so that you could use the filters to see what tended to work, how frequently was it profitable, and their average returns. So you can see here it's breaking down different types of strategies, different hold periods, different periods when you open and close, just to get a sense of what tended to work. Obviously, this time around, something could be different. So it's up to you to kind of go in there and read the news and what the stock did to see if something is different coming around this time. You take that into account. But let's just take a look from Broadcom. I'm going to use the historical open range. Let's say the day before earnings, which would be kind of day to today, end of day till day after reporting earnings. And let's see what tended to work here. So Here we see selling the 25 delta put tended to work 92% of the time for an average return of 6%. I kind of look at the more, I like looking more at the defined risk strategies, not just selling like outright. So here, calendar put spread, selling out of the money 25 delta in the near term expiration, and buying one 25 delta put in the outer term expiration. That worked 80% of the time for an average return of 14%. Credit call spread, out of the money, selling 25 delta call, buying the 15 delta call. That worked 80% of the time, but still average return was -2% on that one. So when those losses were big, when they were big. Ratio call spread worked 80% of the time for an average return of 4%. Calendar, let me see that. Call condor spread was the winner 75% of the time for an average return of 28%. Let me see, credit put spread, out of the money put spread. That was a winner 75% of the time for an average return of 16%, and with a standard deviation of 22%. So really quickly, just kind of gives you a comparison of different strategies around Broadcom earnings. Some people like to stick to a few of them and kind of compare them, but this is kind of a large list of different strategies. And if you wanted to go in there and take a look at that data, you just click on this, and this will give you by each earnings, right? This is the before versus after and the returns. And then you could kind of open up the options chain and take a look at the raw data. So that's how you would do that. Take a look at those historical snapshots.
Hey, D, while you're on that screen, could you type in another symbol that's having earnings, DOCU, DOCU, and look at the implied moves and IV crush in that?
Sure. So let's take a look at DocuSign. So this is the historical expected moves, these bars here. These are the historical expected move up or down based on the straddle. And the green one, that's the actual upside move to the upside. The red is the actual downside move. So it shows you a comparison of the anticipated move prior to earnings versus the actual move. So over here on this green side, on September 5th, it reported earnings. The implied move you could see was anticipating up or down 11.5%. The actual move was 21.7%. So that broke through the implied straddle and to the upside. So let's take a look at the stats. So here it's saying the option markets, they overestimated DocuSign's move 78% of the time in the last 9 quarters. The average of the implied moves was 12% up or down. The average of the actual moves was 8.5%. So you could see there, what's that, like 3.5% differential between the average of the implieds and the actual move over here. So let's take a look at what the implied volatility tended to do. And this is looking at the 30-day constant maturity. So an option with 30 trading days to go, not the near-term option, which will have a higher implied volatility, but an option was 30 days to go. The implied volatility on average was down 30% the day after it reported earnings. So you see here, day before earnings, the average implied volatility, 71.1%. The day after reporting earnings, the average implied volatility was 49.9%. 5 days later, the average implied volatility was 50. So kind of stayed right in line. Let's take a look at that historical. So here it is, 2 days before. This is where we are now. In 30-day IV, 131. So way higher than that average of 70.3. We see that the high 131.3, low 46.9. So we're here 2 days before, because today market didn't open yet. This is pre-market. This is before the market opens, yesterday's closes. So you can see way higher than the average. Of course, had a huge move. Let me just take a look at, see this bar here. for September. You could see that that anticipated move, very big, much bigger than these bars shown prior to today, previous earnings. So there you go on DocuSign.
Awesome.
Let's take a look at, let's see if you don't have any other questions on the earnings. I wanted to go see what's going on in the open interest and maybe get to the market on close order and balance report. We'll talk about that a little bit. So let's look at the open, let's look at the open interest. So what I'm going to do here, I'm going to go by contract, and let's take a look at, I'm going to look for call options where the open interest increased by 1,000 contracts or more on a day, and that the open interest, the increase represents at least 20% or more of the average daily option volume in that stock. So this is the relative to the average daily option volume. I'm also going to look for calls that are at least 25 cents in price or higher, maybe that increased by at least 10 cents or more in a day, that the option implied volatility on that option increased by at least 20% or more. Let's also look for calls that are either at the money or out of the money. So I'm going to give it a delta from 0 to 50. Okay, so these are looking for calls that are either, you know, at near the spot price or higher. So let's take a look. We have 14 of them in here. Let's take a look at a couple of them here. So ATUS, that made the list. You see the stock was up 3.5% yesterday to $28.65. We're looking at the September 18th expiration 29 call. So like close to at the money, a little bit above. That option closed at 68 cents yesterday, up 45 cents. Implied volatility increased on that option 21.7% yesterday. Open interest, here we go, it increased 3,062 contracts, which represents 108% of the average daily option volume right here in that ATUS. Let me just see if anything's going on there. So telecom services stock. EW, next one, that was up 1.8% yesterday. We're looking at the Jan 15th, 2021 expiration, the 110 call, so the long dated option, but that strike well above 110, well above the close 87.44. That option closed at $1.32, up 87 cents. Implied volatility was up 29%. The open interest increased by 1,057 contracts on that line. That represents 52.1% of the average daily volume right here. That's why we're getting a long buildup in that option. General Motors up 3.9% yesterday. Looking at the September 18th expiration 31 call, so right at the money. That closed at $1.40, up 74 cents yesterday. Implied volatility up 25.7%. And open interest on that line increased by 14,367 contracts, which represented 29.5% of the average daily option volume in General Motors. Let's take a look at a couple more. HDS, that was up 1.7% yesterday. This one looks like it's more going into earnings. So people coming into earnings, buying calls, that was reporting earnings September 9th. But September 18th expiration, 42.5 call. That option closed at $1.27, up 50 cents. Implied volatility was up 24.1% to 55.3. Open interest increased by 1,199 contracts, which represents 241.2% of that average daily option volume in that stock. Let's say NLS up 13% yesterday. Looks like in the September 18th expiration, 17.5 call, that option closed at $1.38, up 88 cents. Implied volatility was up 23.6% to 159.4. Open interest increases 2,240 contracts on that line, which represents 177% of the average daily option volume in NLS. So again, a long buildup. Another way we could look at it is, I'm going to look at the trading activity and see in notional terms. So we see General Motors yesterday on that line that we're talking about, in notional terms, almost $2.8 million worth of call options traded in General Motors on that September 31 call. Nokia, $587,000 worth of October 16th 5 calls. So let's take a look at that. What's Nokia doing? So down 5 cents today, but let's take a look at Nokia. So in Nokia, you could see here the open interest on that October 16th 5 call increased by 20,911 contracts, representing 49.4% of that average daily option volume. So that's really quickly, we went over a couple of the big open interest increases in the calls from yesterday's trading activity. Well, if you don't have any questions to that, I'm going to move on.
Someone was interested just because of what's going on this morning. It looked like there were more down. If there were any interest in one in the puts that jumped out at you.
Yeah, we could take a look at the puts then. Let me do the opposite with the deltas here. Let's take a look at the puts. So on the puts, I actually only see this one, FIVN. Let me just release it. So really, with the long buildup, I'm only seeing, let me see if I have all the parameters set the same way. Above 25, 10% more.
Hey, while Dee's doing a search here, make sure you subscribe. There are new chameleons out there who are asking, how do we see the videos? All the videos are on YouTube. And we do put how-to videos. Our webinars are live in there. So if you subscribe to YouTube, you get alerted to any new videos. And that's the place to go, is our YouTube channel.
So so the puts, I don't see a huge, there's 10, and I actually had to loosen up the parameters a little bit. CRWD, the puts on the September 4th expiration expiring tomorrow in the 120 put. That looked like that option closed at $2.50. Open interest increased by 3,443. Represents 10.8% of the average daily option volume. And it looks like it reported earnings September 2nd. So let's just take a look if that's doing anything today. So that's down 10.3% to 127.40. And you could see that's way out of $22 out of the money. GME, that looks like the October 16 put. Let me do this. Let me just keep it. Let me see which one's increased by 10. So GME, October 16 put, that looks like that September 9th, they're going to be reporting earnings on the October 16th 8 put. That option closed at $2.14. Implied volatility was up 12.1% in there. Open interest up 6,575 contracts to represents 28.7% of the average daily option volume. Let's see what that's doing today. So that's up 1.8%, 14 cents. That looks like it's an earnings thing. NET, that was down 1.9% yesterday. Looks like on October 16th expiration, the 37 put out of the money put, option was up 72 cents. The implied volatility was up 15.1%, and the open interest increased by 3,300 contracts, represents 18.9% of the average daily option volume. Let's take a look what that's doing. Down 3% today. FIVN down 2.2% yesterday. Looks like the November 20 100 put, 27 bucks out of the money. That closed at $3.95, up $1.45. Implied volatility was up 27.2% in that option. Open interest increased by 1,370, 184.1%. Represents 184% of the average daily option volume. That's down 2.4% in the pre-market hours. So these are a couple of them. These are long buildups in the puts. That's why we're getting these long buildups in the puts. Here's one FSLR I noticed. I think that's like First Solar, right? Down 1.2% yesterday. Looks like the September 75 put, a little bit out of the money, closed at 34 cents, up 14 cents. Implied volatility up 18.6% in there. Open interest increased by 1,800 contracts, representing 22% of the average daily option volume. So let's take a look if that's doing anything, down 1.1% in the pre-market hours. So that's really quickly in the puts from the open interest increases in the puts from yesterday's closing activity. I guess we only have a couple minutes to go, so I can do the, let's just go really quickly to this report. Let's see if we have time. And these are the stock closing order imbalances. So what's happening here is there are certain institutions that have to trade on the closing price, right? So like some mutual funds, ETFs, some hedge funds, they're based on net asset values on closing prices. So when they get imbalances from customers to create new units or redeem units, what they do is they enter in those orders on the close. So we kind of get a sense of here, what the imbalance. So there's $547 million in notional of buy order imbalances versus $1.1 billion in notional sell imbalances yesterday. So we could kind of see here that at least the last couple of days, it looks like September 1st, September 2nd, that the imbalance is much bigger on the sell side than on the buy side. And here I'll just show you because we only have like a minute. Maybe I'll go over it tomorrow as well. But as far as those market on close order imbalances, we see that based on this red bar, we see that on net so far they've been more outflows than inflows in the last couple of days. Of course, that could change, but that's how it's been looking in the last couple of days. I know we got like a minute to go before the opening bell, so I try to get as much in today as I could.
It was an awesome job, D. Everyone's chatting about it in Superpower. I can't even read the chats. They go by so fast. Listen, I'm putting a link to Dima's new article about the SPY. It's the second, it was done, I guess, late last week, right? On Benzinga, D?
I think Friday we put it out there. So we'll see. I'm going to maybe contact them, put out another one on Benzinga. But yeah, it was just basically walking through how to, the logic behind a credit put spread.
Awesome. All right, guys. Thank you for joining us. D, an awesome job. Chameleons, you have a safe trading day. D, you have a great day. I will talk to you later, my friend.
Thanks, everyone. Thanks for joining us and have a great trading day. Hope to see you guys tomorrow morning.
Stay safe.